Hello, everybody, and welcome back. As you can see, I'm doing something a little different. I'm actually supposed to be on vacation this week, but as all small business owners know, there are many times where you can't go completely on vacation. Some things just always need to be done, and I felt that this video did need to be done because it's been weighing on me a lot. I receive this particular question often, and it was just time to address it. And the question is, why does one CPA give me such different advice from another CPA? And there are a lot of reasons for that. Now, there are three basic cornerstones that CPAs have to stand on for licensing purposes. Cornerstone number one is the principle of conservatism, meaning that we are being conservative in our advice and actions for our clients. The second one is actually a whole set of principles. We call it ethics. I'm sure you're all very familiar with this idea. And then the third is the fact that we are fiduciaries for our clients, which means it's part of our job to look out for the best interests of our clients. Just like an attorney does, just like a certified financial planner does, they are fiduciaries, and it's very important that we look out for your best interest. But very often that can look very different from one CPA to another. So the first thing you need to do is you need to make sure that the CPA you are choosing matches what it is you're trying to do. Now, CPAs, they run the spectrum of risk tolerance. So you need to make sure that you choose a CPA that matches your risk tolerance. Now, I'm going to use myself as an example of one end of the spectrum, and I'm going to use a CPA I met years ago as an example of the other end of the spectrum. So just starting with the law of conservatism, I have worked with many clients who have been audited, who have had to work their way through various tax resolution issues. So I've done a lot of work with internal revenue officers, and I've seen what they will and will not tolerate. And keep in mind that what an internal revenue officer tolerates can be different from IRO to IRO. So let's just start there. But being so involved with those types of activities has shown me what can go wrong and how an individual or business can get into trouble because it went wrong. And so I'm constantly taking that information and I'm storing it away and I'm taking it into consideration when I'm working with my clients. And I feel that my job is to make sure that I give advice that puts the client in the safest possible position in the case of an audit. My job is to assume you are going to get audited. And while I can't make any guarantees that the advice I give you is going to make it past someone, in the IRS as an okay thing to do, I work very, very hard to make sure that I feel as comfortable as I possibly can that it is the right choice that will keep you out of trouble. Now, the CPA I met many years ago has a completely different idea of conservatism. In his mind, it's okay to push the envelope as long as the client is aware that you're pushing the envelope. And I'm not saying he's right and I'm not saying he's wrong. What I'm saying is that he interprets that very differently than I do. Now, the second cornerstone I mentioned, the ethics principles. Now that, as everybody knows, can vary from one person to another very, very greatly in terms of their sense of ethics. And it's the very same thing with CPAs. Now, in the state of Virginia, and most states, I believe, in order to maintain our licenses, we are required to take classes on ethics every year. It has to be done. However, how we interpret those are very, very different. Now, again, for me, we are all very often presented with a bunch of choices that may be okay, like technically they're legal, but are they ethical? And it becomes an issue from one CPA to the next, if we have different ideas on what is and is not ethical. So it's just a spectrum, and it's another reason you need to make sure that not only do you pick a CPA that matches your tolerance for risk, but also matches your sense of ethics. Now, the third thing that I was talking about, and that is the fact that we as CPAs are fiduciaries. And so it is our responsibility to look out for the best interests of our clients. And that can be interpreted very differently from CPA to CPA. For me, I interpret that as making sure I make and give conservative decisions and advice to keep my clients safe, while also continually researching what it is that I can do to mitigate their tax situation through the very legal, non-gray area means. Now, my friend, the CPA I met several years ago, he doesn't see it that way. He sees it as, he defines it as being the person to mitigate their taxes and push that envelope to do it at a much higher risk than I am. So he's willing to do things that I consider gray zone areas, meaning that it's kind of wishy-washy as to whether or not it will keep the client safe in terms of an audit, but he's not really worried about that. What he's worried about is making sure that that client is paying as little taxes as possible, and as long as what they're doing is not illegal, he's good with that. So that's why you can get different answers from different CPAs for the exact same situation, because of the way we interpret these principles that we are all licensed on. So I hope that explains it to the best of my ability. It's a very complex idea, clearly, and if you want to discuss it further with me, please feel free. My contact information is always at the end of these videos, and I always look forward to talking about it. It is an interesting subject to talk about. In the meantime, you guys, I hope you have a wonderful last legs of summer, early fall, and we'll talk to you all next week. Take care.